Now we're being joined by Robert Omotunde, who is the research analyst at Afri Invest. Robert, thank you so much for joining us on Capital Market this evening.
Thank you, Temple, for having me.
Thanks. So please walk us through your observations on the markets this week. I know you don't trade, but as an analyst, what did you notice?
Well, we noticed that the expectation of inflation in the system continues to drive the activities within the fixed income end of the market. You notice that at the beginning of the week, on Monday and Tuesday, the MPC sat and decided to keep interest rates at 14%. That's the MPR, citing the need to keep the current real interest rate environment, which is already negative. The committee decided not to further reduce MPR so as not to widen the negative real return in the system. So that basically drove the activities within the fixed income. And in the bonds market, like you rightly cited, we noticed that there was bullish sentiment throughout the week as yields declined on every trading day of the week. Right. On a week-on-week basis, yields were down by 28 basis points. We also noticed that activities within the longer end of the curve, which suggests that investors are kind of taking more position at the longer end of the curve, because we noticed that yields, as you notice across the term structure of interest rate, we noticed that while you have relatively higher yields at the shorter end of the curve, we still have lower yields at the longer end of the curve. Right. We sort of picture an inversion of the yield curve towards the short-tenured instrument as against the lower yields that we have at the longer end of the curve. And it is characteristic of what you would notice in a recessionary period, when you expect that yields, short-term yields, will be much more higher than what you would see at the longer end of the curve.
Right, Robert, let me quickly cut in here and giving you 5 seconds. What will next week look like for the Treasury bills and bonds? 5 seconds.
Well, okay, in the week, what we would expect is that investors will continue to be attracted to higher yield instruments, particularly within the shorter tenured instrument, Treasury bills of 3 months and perhaps 6 months, and the term to maturity of less than 2 years within the bond market.
Thank you so much, Robert. I'm afraid we don't have so much time. I really appreciate this chance that you gave us for your weekend. Well, with that conversation, we conclude the program this evening. I'm Temple Oshaju, and I'll see you next time.